Amito and Benja are in partnership sharing profit and losses in the ratio of 3:2, respectively. We all know that, colleagues, every time you enter into a partnership, you must be having a partnership deed, an agreement, okay? And that agreement will be containing how you're going to share profits or losses. And this is what they have said, that the profits or losses are going to be shared in the ratio of 3:2. Okay, so it means that if you're sharing, if there is a profit, a team is going to share 3 out of 5, then Benja is going to take 2 out of 5. Okay, and they are telling us that also the partnership agreement provides for this agreement, this partnership deal does not only contain the profit sharing ratio, but it also has some of the items that must be included. One here, they are telling us that interest to be paid on the partners' opening capital balances at a rate of 5% per annum. Of course, here partners have contributed capital in their business. They expect a return. As partners, they expect a return. And that return is interest. The interest on capital. That is what partners expect. And they are telling us that that return or that interest on capital is at 5% per annum. Okay. Then Roman 2, they are telling us that interest on drawings at a rate of 8% per annum on all drawings during the year. Interest on drawings. Sometimes these partners may take some money, may withdraw some money from the business for personal use. So if you're a partner and you withdraw some money from the business for personal use, of course, it's like now, it is no longer your money. You have to pay some interest on that money you have withdrawn. Then they are telling us that partners salary of a team is this one and is this one. And we know that, colleagues, sometimes you may be a partner in the partnership business, but you realize that not partners sometimes share or receive salary. Some of them may just contribute capital and they wait the return. You find that some they just contributed the capital, they are not going to participate in the day-to-day activities. They cannot earn salary. So you may be, let's say, 3 partners, but out of 3 partners, you find that 1 is the one receiving the salary, or 2, or all of you, depending on your agreement. Okay. At the beginning of the year 2022, the partners' capital and current account balances were as follows. We have partners' capital and partners' current. There is partners' capital account and partners' current account. These accounts are different. Partners' capital account, most of times we are going to be allocating, or we are going to be putting only the fixed capital. In a partner's capital account, we only indicate the fixed capital, what these partners contributed at the start. And maybe along the way, they may decide, one of the partners may decide and say that I want to add in more capital. So if there is a movement in the capital, that movement, if maybe one partner is increasing, is adding more capital to the business, then you're going to be adjusting this partner's capital account. Or if maybe one of the partner is leaving the partnership business, of course, you're going to you're going to adjust this. Then partner's current account. This one just look at say short term. Short term, maybe adjustments every time you're handling issues related to partners, you realize that we are going to be basically adjusting this. Let's say they are going to share profit. Maybe these partners, you are going to pay them salary. We will be adjusting this account as we are going to see going forward. So these are the balances at the start of the year. So they are telling us that the partnership's profit for the year ended 31st December was showing this amount of money. Colleagues, sometimes you'll find that you're given a profit for the year, or you're given a loss for the year. However, you may meet a scenario where you are not given this profit, and you're the one to look for this profit. How do you look for this profit when it is not given? It means that you will be using the knowledge, that knowledge of preparing financial statements, income statement, the same knowledge. You use that knowledge and come up with the profit, the partnership profit. But if you're given that profit, it's very easy. It's very easy. So here they are telling us that we prepare profit and loss appropriation account for the partnership. Okay. The reason why are you preparing this? Why are you preparing this profit and loss appropriation account for the partnership? The aim is to get the profit or loss that can be shared to all these partners. That is the reason why you're preparing appropriation account.
Now this one.
Okay. Part B, we are going to be adjusting partners' capital account and the current account. So let's start appropriation account for the year ended 31st December 2022. So here, the first column, I'm going to put here details. So we always start with the net profit. Net profit. That is before appropriation. Before appropriation. Now, this net profit, you start with net profit if you're given that profit, of course. If you're given loss, you start with loss. Okay? But as I said, sometimes you'll find that you're not given this net profit, and you're the one to look for this net profit. And if you're the one to look for this net profit, what you're going to do is to use the same knowledge of preparing income statement. You start with sales, look at sales, talk about cost of sales, same knowledge, look for net profit, cost of sales, then you get gross profit. That is if you are not given net profit. Net gross profit. Once you get gross profit, look at other incomes. So you get other incomes, look at get your gross income. The same concept, then you less operating expense, you less expenses. You less expenses. But you recall that with this module, expenses we are talking about are admin expenses. You have to categorize admin expenses, then selling and distribution expenses, then finance costs. Once you do that, then you get net profit. The same knowledge. So this is the net profit. The net profit we are putting here. It's like this one. So it means that if you're not given net profit, they will give you trial balance and additional information, and that you're the one to adjust and look for the net profit. Okay, but the good thing here, we are given net profit. We don't need to do all this saga. We are given net profit. So we start with that net profit, and it is how much? The net profit given, or the profit for the year, it is this figure. So it is this figure. Then once if it is a loss, if you're given a loss, always put that figure in a bracket to show that that is a loss. But if it is a profit, we put it as a positive figure. Once you're done with that, what are you going to do? Now you're going to adjust this. You're going to adjust this net profit. The item that appear in appropriation account that can increase this net profit. One, we are going to be adding back. Remember, we have interest. We have interest on drawings. Then we have interest on capital, interest on drawings, and interest on capital. Which one can increase this net? Which one can increase the net profit?
Isn't it interest on capital? Is interest on drawings.
One is saying interest on capital, another one interest on drawings. So it is good to know. Of course, we are talking about partnership, colleagues. We are talking about partnership. Now, who is going to contribute capital? There are partners who are going to contribute capital. And these partners expect return, expect interest on their capital. So who is supposed to pay this capital? Is it a partnership or not? If it is a partnership business paying this interest, it means that that interest is going to reduce the net profit. Remember here, what we are going to be doing down is to look for the profit that can be shared among all partners. That is our aim of preparing appropriation account, to get the profit that can be shared by all partners. Okay, so we are saying here we have interest on capital and interest on drawings. And we have confirmed that the interest on capital it's actually the partnership going to pay this interest. And it means that this interest on capital is going to be out of this. You're going to remove interest on. You are going to remove interest on capital here. Then interest drawings. Drawings simply mean that partners have withdrawn just money from the business for personal use. And it means that if these partners have withdrawn money from the business for personal use, we expect these partners to pay some interest. And if these partners pay interest on drawings, it means that your net profit is going to increase, or the profit to be shared is going to increase, because we expect these partners to actually bring in some money. So it means that here we are going to be adding interest. We add interest on drawing. Okay. So we have Amito. We have also Benja. The rate is the interest on drawing. What is that rate? Of course, you need first to confirm, do we have drawings in the question? The interest on drawings is 8%. So we ask ourselves, do we have drawings during the year? We have drawings, and with Amito's drawings, it is 54 million. Then Benja's drawings is 93 million. So we need interest on, drawings. We get 8% for Amito, we get 8% times 54. Then for Benja, we get 8% times 93. Which screen are you seeing?
The question paper.
So here we are going to get 8%. We are getting 8% times 54 million. Then here we get 8% times 93 million. So we have interest on drawings. Is it clear? Any question here? So it means that, yes, please.
A question.
Yes.
Maybe if you would help me to understand the double entry of interest on capital and interest on drawings.
The double entry. When partners are charged interest on drawings, we debit partners current account. So about that, then we credit appropriation account. I don't know whether I shared with you this document. When there is interest on drawings, these are the accounts that are going to be affected. When we open part B, you are going to realize that partner's current account is debited by interest on drawings. We are going to say that. Yeah. Someone who asked, I think you are now okay, about the accounts that are affected. These are the only accounts that are affected. If there is interest on drawings. Then if there is interest on capital, if there is interest on capital, you're going to debit what now? The opposite. You debit appropriation account, then you credit a partner's current account. Remember, every time you're crediting partner's current account, it's like the account is increasing. We are going to see that with current account. We are going to see that every time you're crediting a current account, partner's current account, that account is increasing. But that way entries can confuse, but that is how we handle this. This is if there is interest on capital, then here it is interest on drawings. Those are the accounts that are affected. Someone who asked, is it clear?
Yes, it is.
So the next step we do what? Once you add interest on drawings, you go back at the question and see what are the items given. What are the items given? As we said, interest on capital, it is going to reduce what these partners are going to share. Interest on capital. So before you reduce the interest on capital, you first add interest on drawings. But it is not a must that you have to first add. Just you need to understand that interest on drawings is added back to net profit, then interest on capital is subtracted. So the next item here to look at is we are going to less our interest on capital. Okay, then we have, you can do a working separately and come up with just interest on capital, or you just do it from here. Then we have here Benja. The rate is at which percentage? Interest on capital, it is 5%. So we get 5% times, here they are saying interest to be paid on partners' opening capital balances. Remember, you have capital balances and current balances. So as we look for interest on capital, we are going to be focusing on these figures. We get, for Amito, it will be 5% times this. Then Benja, it is 5% times 240 million. So this is 5% times was what? Times what?
Times that 360 million.
60 million. And what do you get? Remember,
18 million.
These figures are negatives. You are subtracting. But for you, don't put negatives. Put figures in a bracket to show that you are subtracting. Okay. Then once you do that, what else can reduce the profit to be shared?
Salaries.
You less partners' salaries. All of them qualify for a salary. Amito, the salary is how much? Basing on our question, Amito's salary is how much? Here, actually, they say
Amito, it is 27 million.
partner's salary, Amito is 27 million, then Benja 15 million.
Mhm.
So here it is 27 million. And then here it is 15 million. Do we have any other item that we should subtract? Remember, as you do this, your aim is to get the profit that can be shared by all partners. The profit that can be shared by all partners. Okay. So do we have any other item, or that's all? We have any other item in the question, or that's all? So if you have in the question, if you find that actually partners had some loans, maybe they lent money to the partnership business, then you also include here partners rather interest on loan, you put it here. Interest on loan, you raise it here. Okay. But we don't have loans in these questions. So basically, we can get now the remaining balance that can be shared. It can be called also a residual profit. This is the profit that is available to be shared by all partners. Do you have this figure? Do you have this figure?
Yes, yes.
Okay. So once you get your profit, the next step is to know Benja is going to take how much. Amito is going to take how much. You share, you get the profit share. The profit share. Profit share. Benja, remember you're going to share profit according to the profit sharing ratio. You can start with Amito, then followed by Benja. So Amito, the ratio, remember in the question they told us they are sharing according to which ratio? They are sharing according to 3:2. So Benja is going to take 3 out of 5. 5 from where? You get 3 plus 2. So we get 3 out of 5. We multiply by the profit to be shared. So yeah, we get so the reason why you're preparing partners appropriation account is basically to get the profit to be shared by all partners. That is the reason. If you don't adjust, like here, if you don't adjust this net profit, and you say that let me share this profit according to the ratio, you're sharing the wrong profit. It means that you'll be sharing the wrong profit. Because ideally, if it is, let's say, partner's salary, you may realize that some partners actually don't qualify for what? Don't qualify for salary. Some, they just contribute and they are not paid. They wait for the return. So we just try and make sure that we adjust this net profit to make sure that we remain with the residual profit or the profit that can be available for all partners. Okay, that is the reason why we are preparing appropriation account. So the next is to prepare part B. We are done with part A. Part B, we are going to prepare our partners. And let's see if is there any question before we go to the next part? Any question in part A? Remember, I said in accounting, it is good to know the format, how it flows. Don't reach in a paper and you find that here you are adding back interest on capital. Yeah. So here it is partners. Let's prepare partners capital account. After partners capital account, we are going to prepare a partners current account. So if you have opening balance for capital, always put it on credit. So here you are going to get balance brought. The year commenced, this year commenced when the capital was at how much? And we are given that figure in the question. They are telling us that at the beginning of the year 2022, the partners' capital and current accounts balances were. So we have Amito and Ben. So we indicate this for Amito. Then for Benja, we indicate 240 as the opening balances.
That could be okay for
This is 240. Find that partner's capital account is going to be affected only and only if you find that there is a movement in the capital. Only if there is a movement in the capital. Maybe Amito has added in some capital in the or Benja has added in some the business. Or if the statement is very clear and they tell you that during the year, there is part of the capital that was withdrawn. They can give you that statement indicating that maybe Amito withdrawn capital or withdrew capital from the partnership business. Maybe is leaving, or depending on how they have phrased the statement, you need to look at the language of the examiner. They will always be clear. If you find that there is a partner who is leaving, or maybe this one partner is adding in more capital, you will adjust this account. But if there is no additional capital, you will find that this is the only item we indicate. We only indicate balance brought down only, then we close off our account. Because when you check in the question, actually we don't have anywhere saying that some capital was added in. No, we don't have that. If let's say Amito or Benja adds in some capital, then you indicate here addition. Addition, you add what he or she added. In terms of addition, it can be through cash or bank. Don't put here. The corresponding account is either by cash or through bank. So if you will find that in some questions you have that. So in this question, this is the only item that is going to affect our account. We can close off. We can close off. we can close off our account. Remember, if you open an account, you should always close off. Debit side should always be equal to debit side. So the total you have for this side, you put it also here. Then you also put it here. We are trying to close off our accounts. Then here you see that this account is not balancing. So as you balance, we are balancing at the end of the year. So that is here, maybe you can indicate that the column for debt or what, but we are the balance here we are going to close with is balance carried down.
Yes, please.
And that's all about partners capital account. We are done with partners capital account. So the next is the partners current account. So we start with the opening balance in the question. First confirm whether they have indicated debit and credit. It's very key. It's very, very key. These are current accounts. You can open this current account with a debit balance or a credit balance. If they are silent, then know that we open current account by crediting. But if they have specified that the opening balance is a debit balance, make sure that you have opening balance on the debit side. Like here, they have specified that the opening balance at the start of 2022, the opening balance for current account, for Benja, it is on the credit side. Then rather for Amito, it is on the credit side. Then for Benja, it is on the debit side. So we can record for Benja, for Amito on the credit side. Here, this is the opening balance carried. And if you want to use the date, that is at the start, 1st January. This is you're dealing with 2022. And this is your balance brought to down. Balance brought to this. And it is on this. Then for Benja, the opening balance is on the debit side. The opening balance is on the debit side. So this is our debit side. This is 2022 still. And you're opening this side. With also a balance brought to forward. For Benja, it is how much? For Benja, they are telling us that on the debit side, it is this figure. If they have not specified, then we put everything on the credit side. If they have not specified.
Sorry, Abby, why is Benja on the debit side? I didn't quite get that. And Amito on the credit.
In the question, they are clear that you're starting this year when the opening balance for current account, Amito, the opening balance is here on the credit side. Then for Benja, the opening balance is on the debit side. I hope it's okay. If you find that in the question they have not specified, then put everything on credit side. Okay, next. Now we need to know items that affect partner's current account. Of course, here we are looking at specifically partners. We are looking at specifically partners. If you realize that the partner is gaining, we are going to be crediting here, this side. If you remember, it's partnership paying these partners. It's partnership paying these partners. If you realize that they are getting something from if you realize that these partners are getting something from the partnership business, then we put everything on credit side. Then if it's partner paying, we put that figure on the debit side. So the item you should start with is basically the profit. Because you have already shared the profit, you can start with the profit shared. The profit shared, you just come here. Profit share for Benja, it is this one. So for me, so it is this figure. Then for Benja, it is this figure. If it is a loss, if they share the loss, you also, if it is a loss, colleagues, you don't put it this side. It's a loss, you put it this side. Are we together, colleagues, on that? If they shared, if it was a loss here, you don't put it on credit side. You put that loss shared on debit side. I hope that is clear. Because not every time you realize that the questions are going to be profit shared, no. If you realize that it is loss shared, then put that loss shared on debit. Then the next is what else? Yes, please.
Abe, you've lost me a bit. Can you explain that using your DASIL kind of concept? Because if they are taking out, if they're giving them profit, that means income, I thought, is reducing in the current account. Is that the explanation? What is the explanation for debiting and crediting on the profit, the appropriated profit?
I think we're putting it on the credit side because it increases their, how can I say it? Like Abel, you mentioned, if your this is like equity, if anything in your equity account increases, you credit, and these are profits they are sharing, so that's why we credit. But if it's a loss, we debit, we don't credit.
Yes. Actually, that is, you can just pick from that knowledge. Now, you realize that every time there is an increase in profit, then the profit account is always credited. The profit account is always credited. The DASIL, the one you were asking, you recall that. If it is the income, remember income is also like profit. So every time you have an increase in profit, the profit account is credited. Is credited. Then if you realize that now your income is reducing, what you're going to do is, how do you reduce your profit account? Is basically by debiting. by debiting. That is the situation where you have, let's say, a loss. I don't know whether now it is clear to side of it's you, Professor, who was asking. Don't know whether
Yes,
now
and it is very clear. It was me. Thank you.
okay. Now, what are other items? If they are getting something from partnership business, if partnership business is paying something to these partners, this partner's account is going to increase. For example, here, you're going to see that the partnership is going to pay these partners' salary. And if you pay partners' salary as a partnership business, what will happen to this account? Are you going to debit or you're going to credit? Look at this as if they are getting income. And every time an income account is increasing, then we credit that account. Look at what they are receiving as if it is income. And because it is an income, we are going to do what? We are going to credit. And another knowledge is you can pick it from here. The items you subtracted here, the items you subtracted from this point are going to be added back at this side. Partners salary, I can just put salary. And the salary for Amito is how much? Oh, Amito, it is 27 million. Then for Benja, it is 15 million. Okay. What else can we include? You have here interest on capital. Who is receiving this interest? Of course, there are partners receiving this what? This interest. Interest on capital. Partners are gaining this. So we have also to include it here. Interest on capital. You put it here because their income is increasing. And that interest on capital, we have 18 and 12. 18. Then here we have 12. What else can we put here? Oh, that's all with this question. If we have, let's say, interest on loan, maybe these partners gave loan to partnership business and they received interest on loan, then that interest on loan, you also put it here. But we don't have that. So another item that can reduce. Another item that can reduce this account is what? What can we put on credit, on debit? Those who can try to recall, what do we put on debit? Because I was talking about
interest on drawings.
That is number one. What else do we put? On
Drawings themselves.
Yes, perfect. We start with the drawings. Drawings. Then we put interest on on drawings. Okay. Do we have drawings in the question? Please don't put something that is not in the question. If you don't have drawings, it means that you also don't have interest on drawings. For Amito, what is the figure? For Amito, the drawings.
Oh. 4320. Actually, 4,320,000.
I think that's what you're saying is interest on drawing. But
Yes.
the actual drawing,
Amito's
the actual
drawing.
drawing that
Drawings is 54 million.
54 million. This is 54. This is 54 million. Then for Benja, it is how much?
33
For
million.
Benja, it is 93. 93 million. Who can tell us the reason why we are putting drawings on debit side? Or what are the corresponding accounts whenever there is a drawing? Remember, whatever we are preparing in the books of partnership. We are preparing in the books of partnership, whatever we are doing. So if there is partners drawings, we normally debit partners account, then the corresponding account will be cash or bank. Because now these partners, the money is no longer in the partnership business. So it means that you have to reduce in the partnership, in your partnership business, you have to reduce your cash or bank by crediting. And the corresponding account will be, the corresponding account to debit will be the partner's current account. That is basically the reason why we are debiting this. Let me hope it is clear. Look at this as if you are in the books of partnership business. Then here, interest on drawings. Interest on drawings, it is this one. It is this one. Then here, it is this one. Any other? Oh, we are done. Let me check the question. Question. Do you have any other item to adjust? I think that's all. That's all. That's all. We can balance off our account. We can balance off our account. We can balance off our account, and that will be all. Remember the question, when you check, it is not only just preparing, you have to balance off. They are telling us that from the above information, post the appropriate entries to each of the partners' capital and the current accounts, and balance each account for each partner as at 31st December. So you must balance off. Balancing off means that debit side must be equal to credit side. And if you have a balancing figure, that you will indicate that you have a balance carried, the balance to carry forward. Okay. So which side is, we start with ammeter. We can balance of ammeter. Which side is higher, debit or credit? I think credit side. Always leave like one line. But since I'm sure that credit is higher, I can just get the total. You balance the column for each partner separately. Handle each partner separately. So you have the total, put also this total this side, because it is the higher figure. Then balance of, you see that this now, this side is not balancing. If you add this plus this, you cannot get this. So it means that we must get the balancing figure. And that balancing figure will be your balance carried. Right. And that balance is how much? I get this minus the total of this one plus this. So it means that you have balanced of your sides. The debit side is equal to credit side. Then you handle Benja situation. First, know which side is higher. The debit side or credit side. If you check, colleagues, let me add, just do a simple addition. Let's see which side is higher. So you have to do side work and first confirm. So when you check debit side, you have this total, credit side, you have this total. So you see the saga I was talking about. If you don't leave a space, you're going to find that you're fidgeting around. It is good to, let me put here another space. So we have confirmed that actually the debit side, when it comes to Benja situation, debit side is much higher than the what? Than the credit side. So we put the total here. And I hope you're understanding why I'm doing these things. Please, if there is a question you ask, don't keep quiet. Remember, we are going to discuss. Right now, we have a lot to discuss. We cannot keep on repeating. So once you put this on debit and credit, then since the credit side is not balancing, if you get this plus this plus this, you cannot get this. So what is the balance? What is the balance? That balance will be your balance carried forward, which will be equal to this figure minus this plus this plus this. Do you have this? These are balance. These are our balance carried. So it means that when you start the next year, when you're starting the next year, you will be having as at first January, when you're starting 2023, 1st January 2023, you will be having balance brought forward of how much? This one. This one. Remember, if you have a balancing figure on, if you close your account with a balancing figure which is on the debit side, you must open the next period when that balance is on the credit side. So that's why you see this figure is on debit. Now I'm putting it on credit. Then this one, which is on credit, I will open next year when this figure on credit is appearing on debit side, when you're starting the next year. So you'll find that you also have a balance brought forward here of this amount. So it's like you'll be having the same question here, the way they gave us the question like here, that you are opening 20, now you will be opening 2023 when Amito has a credit balance, like the way it is indicated here, when also Benja again has a debit balance. That is for the next year. Because you have closed off your accounts when these balances are in a different side. And colleagues, that's all. Unless if there is a question. That's all about part A and part B. The concept is the same. The concept is the same. Even the other questions we are going to do. Just that the timing, sometimes you may find that the time you're in receiving interest is different. Maybe your portion may be interest on capital, depending on you just need to read the question and understand. But the flow is the same.